Hello guys, and welcome to my YouTube channel once again. So in today's video I want to show you how you can do a quick top-down analysis to find a good trading opportunity that will help you make some good profit. All right, so we are going to do it on this particular pair here, volatility 25 1s index, and we are starting from a daily time frame. All right, you know, VIX 25 1s is one of the volatile pairs on the reef, and if you can get a good entry, you will be able to make some very good profit with a very short move. A very short move in the market can give you very good profit. All right, and a very little move can also wipe your account if you are taking the entry wrong or you're getting the analysis wrong. All right, so with the top down analysis you're gonna see in this video, you'll understand how to approach the market to trade this kind of pairs and even other pairs, and how to easily spot some high probability trade setups that will help you make some good profit. All right, so if you're watching my video for the first time, do well to click the subscribe button, like this video already because you're going to learn a whole lot from it, and also share your thoughts in the comment section at the end of this video. All right, there is a link in the description of this video that is going to take you to my Telegram channel. Once you get there, you can find more information about the things we do, or let's say the April mentorship batch, which is the registration is still ongoing. You can go there, then you get more information from there. Or if you want to reach out to me for a private mentorship, you'll find my direct contact right there on the Telegram channel. All right, so let's begin. All right, so we have a lot of stuff right here on this chart right now. You can see the market was buying massively. There was a massive buy before the market started consolidating, then it started selling. You can see massive buy, then the market did what? It consolidated. This is a consolidation here, or ranging. You see the market found it very difficult to break through this zone, then finally it broke through it and now it is selling. All right, so now while I want to do this, I'm just going to look at the trend line aspect of it. I'm going to look at the trend line aspect of the top down analysis. All right, so let's say you have, when market created this first high here, the market created this first high here, then it created the second high. Like, let me get the arrow line tool. Market, after creating this first high, it sold to this level, created the second high. At this point, you put your trend line on these two highs, and well, let's say you wait. Then the market sold, came back to retest this neckline. As you can see, it retested this neckline on the third touch. You can see the massive sells. Now you don't just enter the trade because the market has done a third touch. You cannot just enter the trade at that point. We'll go down to a lower time frame and keep on going to refine what we are seeing here, so that you know where to actually enter the trade, or if the market is actually showing the structures that confirms the market it is ready to sell. All right, okay, so although on the daily time frame you can see some consolidations here, we have about 4 candlesticks right here, the 2 bullish candlesticks and 2 bearish candlesticks, but you can't really tell what is actually happening here, except you are one of my students that understand the engulfing candlestick strategy. You know, this is a very clear opportunity to take a trade because it's actually a resistance zone, and we have an engulfing candlestick somewhere around here, as you can see, and you can see the market sold massively. All right, so you can just take a trade right from this point, then you close your trade. You can close a trade here if you're not comfortable holding it down. All right, so it's a very nice opportunity, but let's just go down to the 4 hourly time frame to see what we can have. Besides, before you even go, sometimes you need to look at the chart on a higher time frame to know what is possible in lower time frame. Looking at the candlesticks we have here, this is a clear indication the market was creating some higher highs and higher lows on a lower time frame. All right, so based on what we have here on this daily time frame, we know the market was creating higher highs and higher lows on a lower time frame. So let's check the 4 hourly time frame to confirm that. All right, so on the 4 hourly time frame, you can see this is the spot right here that the market was actually creating higher highs and higher lows, and we can easily place our trend line just like this, and we duplicate this trend line to put another one right here. So putting another trend line right here makes it a very clear channel pattern for us to see, because you can see how the market bought within the channel and later broke out. Then also, if you understand the continuation strategy, we have an impulsive sell, then the market started creating higher highs and higher lows, then you should know that the market is actually going to sell. For the fact that we are having a wick rejecting from the daily time frame, and it closed below the trend line, then it is a very strong indication the market will sell, coupled with other confluences. All right, so you can see the market on getting to this zone, it sold after creating the higher highs and higher lows. It sold, created a change of character before it pulled back. All right, so now what will happen is this: you most likely because from what we see here, let me go back to the chart. From what we see here, you may feel okay, the market wants to create a head and shoulders, this is the left shoulder, this is the head, then we expected the market to buy up to this level to create the right shoulder, but unfortunately the market did not come. All right, so what I want to show you guys is what you should always be looking at. Sometimes your predictions may go well, but where you expect the market to actually touch, it didn't before it starts going your way. All right, so like now you can see this is actually a strong zone in this market. We would expect market to come to retest before it starts selling massively, but the market never got there. All right, so for that reason you have to look closely. Why did the market not get there? Once you start noticing that the market is finding it difficult to move up to that place, you go down to check why the market has refused to get there. Why is it not possible for the market to just get to that spot? Now, if you look at here at this point, if the market sold up to this trend line, you can see on getting to this trend line, there's another bullish candlestick right here, then a bearish candlestick, then another bullish candlestick with a long wick down before the market was able to sell. This means that the market was actually battling at this zone. This is another resistance, a support zone where the market found it difficult to break through immediately. This is about 4 candlesticks, meaning that for almost one full day the market was unable to go below this zone. So if you go down to 1 hourly time frame, you will see that this is actually a clear zone in the market. So let's go down to the 1 hourly time frame. All right, so on the 1 hourly time frame, what can you see? What I just explained to you is very obvious here on the chart. Now you can see the consolidation and rejections here along this zone. You can see the market found it a bit difficult to break through this zone. When it finally did, there was a little retest at this point. So this is actually a zone to expect, to respect. All right, so we can easily mark this zone. Let's mark this zone. Let's mark out this zone. All right, and you can see on market getting to the zone, it stopped, it rejected and started selling massively. All right, so if we extend that zone to the left, you will see there must be some areas or some opportunities where the market or activities are along this same line. You can see them where the market also tried to buy and tried to sell too on this same zone, meaning this is actually a strong zone in the market too. All right, which is more obvious on the 1 hourly time frame. So you can see the buys here, the sells there, and market bought sold from this zone previously. Market sold from this zone previously. So once you notice the market is not trying to go to where you expect, check within. There must be something that is holding the market, because you might be waiting for the market to get to the zone at the top, and it will be taking forever. It'll be taking like forever for the market to get to this zone, and like you can see, the market never got to this zone. All right, so if you notice this on the chart and you see the market sold nicely, market sold, retested this a little, then sold. All right, then the market started going back to do a proper retest. All right, the market started doing a proper retest, and on this proper retest you can see the way the market moved. Another continuation setup. Look at it, started creating higher highs and the higher lows. These higher highs and higher lows, you will see them more clearly when you go to the 15 minutes time frame. Meanwhile, let's just put a trend line to mark it correctly, guys. Let's put a trend line. All right, then if you bring this, you put here, you see we have a channel pattern right there. You have a channel pattern right there. So let's check the 15 minutes time frame to see what we have at that point. Where is the spot? Okay, so we have it here, guys. You can see this. Always have it at the back of your mind, the continuation strategy. If you know it, just always try to identify it. Look at what happened, guys. After the sales, the market started creating higher highs and higher lows, higher highs and higher lows. Finally it broke through the trend line because you need form the channel, then it broke out of the channel, came back to retest. Guys, look at, after breaking out of this, then it started consolidating here, then sold, coming back to where it consolidated. You can see that's where the market retested and sold massively. You can see the massive sales, and this area also is where we had some buy activities previously. Let's look at it. All right, so you can see that market bought from this zone, market sold from and bought from around this same zone previously. All right, so it makes the zone very valid. So in other words, I would want you to always watch out for where market has where you have consolidations on the chart, where you have consolidations as strong areas to always, expect the market to react on the chart. All right, it may not react at the beginning of the consolidation, like the market buys to this the bottom part of the consolidation and reverses. Sometimes it may buy into the consolidation, like inside towards the top of it, before it starts reversing. But just know there is a very big likelihood that there must be reactions once the market gets to the consolidations like this. So like what happened, you can see the market bought back into this zone and it sold massively. Trust me, if you go to the 5 minutes time frame, you'll notice there was a continuation setup here, and you may see that there was something that looked like a triple top at this point, or a double top on the 5 minutes time frame too, and you can see the massive sales. This is one of the pairs you can use to flip the market. You flip your account, because the minimum lot size is 0.005. Let's just see, 0.005. And if you're taking a trade at this point, let's say you take the trade on the retest, then you put your stop loss just here about $6, then your profit is what you're targeting. This base of this pattern is about $22, so about 1:4, or about 1:3 point, maybe 5 or 7. All right, it's a very good setup. It's a very nice setup. You take your profit and you make your money. And mind you, if you like try to refer to the higher time frame, you won't just take your profit there. The market has a longer way to go. Like on a daily time frame, you see this, the market has a longer way to go, except the market is on a very strong resistance zone or support zone on the daily time frame. For example, this particular zone here, once the market if though the market has already played out, you should know the market will most likely want to respect this zone. Remember what I told you previously, consolidation. This is actually a consolidation here on the left side. So the market reacted and finally it broke through it. All right, so these things are very simple things. If you can just be doing this regularly, you will master how to do a top-down analysis for your pairs, the pairs you want to trade, and then you arrive at a very profitable pair. All right, so it's very simple. And also, if you understand our engulfing candlestick strategy and you combine it with this analysis, this top analysis, trust me, you'll be making some massive profit, mostly in the chart. You're making some good profit almost every day, guys. You're making some good profit because you do a top-down analysis. You use the engulfing candlestick to understand the directional bias and also get a perfect entry. You combine it with the continuation strategy, guys, it's going to be massive. All right, so the April mentorship batch, like I mentioned, is the registration is still ongoing. So try and do yourself a favor by trying to register and enrolling in that mentorship. Is going to be massive, guys. It's going to be massive. So meanwhile, do not forget to like this video, share your thoughts in the comment section, and I will see you in my next video. Stay blessed. Peace out.